As investors continue to be concerned about the return on investment for AI spending, Nvidia's shares are down about 6%. The stock has dropped almost 30% from its peak. Here with our trade is Boris Schlossberg, Managing Director of FX Strategy at BK Asset Management and a contributor to CNBC. Boris, so Nvidia may suffer if customers downplay the necessity of making a significant investment in AI. I'm not sure what's going on with Blackwell chips and all that, but the price action alone is getting everyone's attention. Here, what are you doing with the stock? I think it's like PTSD for those of us who survived the dot-com era. Is this another Cisco? Not in my opinion. But I still believe AI has a lot of potential, and Nvidia will undoubtedly gain the most from it. Indeed, there is still a lot of demand for the Blackwell chips, and they plan to begin shipping them in the third quarter. It's definitely one of the more alluring chances at the moment, in my opinion, considering all the upheaval they've had and the correction they've already gone through from the highs. It's actually a good idea to sell options against it and wait for it to come to you because of the volatility. For instance, you can purchase the stock 13% below its current price by redeeming $1 for the put that expires this week at $87. In the long run, I believe Nvidia will still be a very, very strong investment, so if I were to take a position in the company today, I would sell puts and wait for the stock to come to me. Due in significant part to the growing need for artificial intelligence and high-performance computing, Nvidia, a titan in the semiconductor business, has performed exceptionally well in recent years. However, given the market's volatility, the issue is raised. Is Nvidia a dependable safe haven in times of market decline? We must examine Nvidia's performance during prior market downturns in order to comprehend its resilience. Let's begin with the financial crisis of 2008. At the time, Nvidia's primary concentration was on gaming graphics processing units. The business did go through a slump, like many others, but what's remarkable is how fast it bounced back. Nvidia showed the ability to recover even though the overall market suffered greatly, indicating its inherent resilience even during trying circumstances. The COVID-19 epidemic precipitated a severe market meltdown in 2020. The circumstances were different this time. In addition to surviving the storm, Nvidia turned out to be a powerful performer. The demand for GPUs increased due to the rise in remote work and the expansion of online gaming during lockdowns, which caused Nvidia's stock price to soar. It was evident that the business was not only robust, but also in a good position to benefit from the new normal. Our investing committee members are expanding their existing positions or creating new ones in an effort to take advantage of recent disruptions. Now joining us from New Edge is Rob Sin. Rob, we've discussed not being at Nvidia a lot over the past few months. Although you had several tech names, this was the one you didn't own. Tell me why, though, now that you do. You see, Scott, when we examined our portfolio, which expressly benchmarks against the Russell 1000 Growth Index, we found that, despite the fact that our average stock had increased 15% from its top, the index had up 21%. This underperformance was entirely attributable to the fact that we did not own Nvidia. Thus, it brought up concerns regarding how to construct portfolios to behave in a particular manner within client accounts while minimizing excessive tracking error or active risk. We examined our portfolio yesterday after being underweight on the company for a while and saw that stocks like O'Reilly were seeing declining same-store sales and a high P/E ratio in comparison to their historical performance. In order to improve our quality, take advantage of a recent valuation reset, and lower our tech underweight, tracking error, and active risk, we made the decision to move that position to Nvidia. A half position felt acceptable because Nvidia would report earnings in a few weeks. Even though we didn't fully commit because there is still some short-term risk, we will have the chance to purchase additional at a discount if necessary. Nvidia is well positioned today, supported by a number of factors. First, its supremacy in AI. Nvidia is at the vanguard of the AI revolution thanks to its GPUs, which are now the industry standard for training AI models. One of the main factors influencing AI's long-term growth prospects is its leadership. The data center industry comes next. As cloud computing becomes more prevalent, there is an increasing need for Nvidia's high-performance compute. Another degree of risk. The ticker sign for Nvidia, NVDA, is visible on your screen as we monitor the company's stock this morning. After spearheading yesterday's Magnificent Seven slump, shares are now rising. During a sharp worldwide sell-off on Monday, those stocks lost more than $650 billion. Due to the stock's erratic performance over the past month, investors are unsure if this is the right time to purchase. Let's introduce More Insights and Strategies founder and CEO, Patrick Moorhead. Okay, Patrick, is this the ideal moment for you to get involved with Nvidia if you haven't already? For investors, massive sell-offs are always a great opportunity. In light of the growth rates, the P/E ratio seems reasonable to me. Since customers may still purchase the A series, Nvidia's competitive position remains unchanged, and there is little short-term risk associated with the Blackwell push, the company's successor to the A series. Therefore, I don't see a significant drawback here, even with the short-term danger. Is Nvidia a secure environment? The business has proven resilient throughout previous market downturns, and its leadership in high-performance computing and artificial intelligence sets it up for long-term success. However, it is impossible to rule out market volatility in the near future. Nvidia is an appealing choice for investors, but it's important to carry out in-depth research, evaluate your risk tolerance, and maintain a diversified portfolio. Making wise investing choices will need keeping up with Nvidia's most recent advancements, as well as general market conditions. The important thing is to approach Nvidia with a balanced viewpoint and a thorough awareness of the dangers and benefits associated, regardless of whether you view it as a safe haven or a high-growth potential. Get your Nvidia keychain quickly for less than $10. Only the first 100 orders will qualify for our huge discount. Currently, Alphabet, Meta, and Microsoft are all relatively inexpensive, but their valuations will increase. Therefore, I haven't done anything in the past several days. As I indicated on the air, I did purchase a small amount of Facebook, or Meta, during the major collapse. However, it hasn't mattered because the market is trading as a single entity, just like during previous volatile times. They fail to discern between exceptional management, entrenched growth, and fortress balance sheets. They are eliminating them all. Therefore, I am unsure of the catalyst. As we said, I believe that the economic data that will be released this week will be the catalysts for the future, because if the data is poor or indicates a struggling economy, it will bring them all to the ground. And that's when you come in. I have nothing to do on such days, which is the reason I dislike the market return at current levels. I don't buy the momentum, and I don't sell my core names. To fill my positions, which are rather filled, and to find others, I need a true washout of the market. Jimmy, the Samus. Look, after the sell-off, Keith Lerner at Truist has upgraded the tech to overweight now. This is one of the places that comes to mind while discussing what individuals find more appealing. And we're going to, let's just take Nvidia. If you look at the performance of semi-name brands this week, Taiwan Semi is up 10.5% this week, while Cadence and TLA, ASML, Lam, Applied, onsemi, Teradyne, and Qualcomm have all had respectable weeks. Nvidia doesn't need to be brought up in every semi-conversation. They're on sale, you see. I don't care which. We can discuss Qualcomm if you don't want to discuss Nvidia. They're on sale, so I don't care. Not that long ago, Qualcomm was worth $230. Now, it is about $165, and the company's prospects haven't really changed in the last 2 months, to be honest. I love it even more here, if you loved it as much as I did when it surpassed $200. I don't care if you get into Qualcomm with me or not, you said, Steve. However, this isn't your day. Hold off for a week or a few days. This is simply where the markets are at the moment. Returning to what I said earlier though, if you enjoy Qualcomm, Applied Material, which I own as